go. Yes. Hello, and good evening, everyone, to yet another live streaming episode by Market Insights. I hope at least everyone can hear me properly, loud and clear, isn't it? So, we are here today to continue our discussion on gap theory, which we saw in the previous live streaming session, and we were also able to look at the different types of perceptions about gaps, and gaps are not never usually formed in markets which are highly liquid markets, which are highly volatile markets. Gaps are not volatile but highly liquid markets. And gaps, yeah, hello everyone. Yeah, thank you very much. Yeah, so today we are going to extend our discussion on that, and we are also going to, yep, we are also going to expand our discussion of the gaps with an elaborate understanding of different types of gap, and not just a single type of gap, because everything has got different types, especially in the analysis world, right? So a single simple kind of a thing, you can read and you can get into it for a very deep meaning. Different variants of that particular simple thing can be highly important as well as elaborate, right? And this intrinsic study of gaps will make us a better trader, and in doing so we will eventually make our trading quality better, isn't it? So just give me a moment. Yes, so this is going to be our agenda today, and let us see some of the screen today's agenda as well, right? So I hope everyone can see this particular slide. We are going to continue today from where we left off. So today is 20th of September, and we are covering the gap theory, isn't it? And today's agenda will be a little bit of market discussion, what data is going to come out, right? Not CPI data inbound, but currently the funds rate. That decision is going to be made by the Federal Reserve. So that is going to be one of the most important data. Then there is going to be these 2 points: gap theory and its relevance, and common perceptions about gaps we have already covered in the previous live streaming session. If you were not there at that moment, you may go check it out on Market Insights channel, isn't it? So yes, let us cover this today. How does the market interpret gaps? This also has been done. And this one, the most important, which I suppose every one of you might be waiting for, right, is what are the types of gaps and how to trade in them, right? That is the only thing we need. But not only that is the most important thing, But that is not the only thing that we need. We also need a particular introduction to the gap, right? Then only we can get to understand what are the different types of gap, right? So let us see if there is any person around. Okay, we have got four people. Yeah, good to go. So let us begin. So types of gaps are varied and different, and each and every single gap has some form of a significance. Okay, what significance it holds and how to trade in such markets, in such situations, it's highly uh, relevant to our study of technical analysis, as well as becoming a better trader, and improving the quality of our trade, right? So these are the types of gaps. One of the gap has not been mentioned in this particular image, which also I'm going to give you as a as a bonus gap, right? That is going to be one bonus gap. So these four are the gaps. The first one is common gap, second one breakaway gap, third is the runaway gap, and the fourth is the exhaustion gap. Okay, so the common gap, as the name suggests, is very common, right? You might have seen in multiple stocks that such a gap is being formed. Just give me a moment. Okay. So such a gap is being formed in multiple situations, right? Common gap, which we will see. So common gaps, as the name suggests, are very common, and they are formed and filled immediately. Okay, so this is the gap, this is the area in which trading never happened. Okay, and the price just dropped from this level to this level. This is the exact figure from the market. Okay, this is a common gap, and we are going to look at some of the gaps, and we are going to categorize them in order to make our understanding, you know, very proper, isn't it? So this particular gap is a kind of a common gap. So the second candle, the candle had some trading range here, okay, and then it went back and closed down here, and so the trading movement tried to breach this particular gap, but it could not. And then we see a very good green Marubozu. This is a Marubozu candle, which is covering like half of the gap that was being formed. Okay, what does it tell us? It tells us that market is somehow anticipating this rise, even though there has been a bearish sentiment previously. The market opened way gap down here, right? But the close was here, green. A green candle was formed. And if you would have shorted just by seeing that the market is open or market has continued, if this is a continuation, like within the day this gap is formed, then you might have seen that such a opening might give you a call for shorting this particular stock or whatever asset class this is. Okay, so what one normal trader would have done, one would have shorted in this position. But was he correct? Is he correct in this particular decision? Absolutely not, right? So what is the correct position, when to buy, when to sell in such a common gap? When this type of gap is formed, we always remember that these are formed after a congestion. Okay, and then there is a intraday, there is a gap down or gap up. This can be taken as an inverse picture, and the same can be understood as a gap up position. So even if there is a gap up or there is a gap down, okay, this is called a gap down because the price opened down. Okay, gap down. This is called gap down. And if the price goes up and above, it opens somewhere here and it closes somewhere here, right? So it is called a gap up opening, right? So gap up and gap downs are mostly, gap up is bullish and gap down is bearish in their understanding. But when a common gap is formed, you don't have to look at the gap type or gap, what I have to do in this particular situation. Should I take a trade? Should I short this position because the stock is open gap down? But what you should do instead, you should wait for confirmation. Okay. After today's live streaming session, I hope most of you will be clear. If a gap is formed, it doesn't tell you to short or to long, right? It tells you to wait. tells you to wait and confirm something that gives you a very strong basis for your trade to be taken, right? And this is one of the most important ideas while trading in a gap. You wait for confirmations, you wait for certain ideas, certain indicators to tell you to do this or to do that, right? This is very, very important because, okay, when somebody sees a gap, normally a trader jumps up on this opportunity to short that particular stock. But if you see a candle like this and a candle gap down opening like this, okay, you should not be the one to short in this case. Okay, people will short. Okay, and that is why the gap is filled, because slowly everybody's short stop loss is getting hit, and everybody's stop loss is getting hit in these candles where the trading range is moving up, right? So this is where the price will, automatically go up. The price has no other options but to go up, because many people shorted. They didn't know this was a common gap. The price was already bullish. Okay, they considered it to be a bearish movement, but it is not, right? So slowly, when the stop losses start getting hit, the price will getting, you know, the stop losses as such, the short orders stop losses are getting hit in this position, right? And when the stop losses are filled, stop loss is basically for a short order is a long gap, right? Long order. So buying order is being triggered in this position. So the price is slowly inching up, and finally, after so and so, these many gaps, these many candles fill up the whole gap, right? Now it is showing that the gap was filled in this condition only. The first candle that pierced through this gap, it doesn't make sense. Okay, I will say the gap is filled in this position when the horizontal mark here, the low mark here, has been touched by this particular candle. Okay, so this candle, we can say the gap has been closed. This is called a closing of a gap, right? The price was not moving in this particular range. Okay, this is the price range. The price was not moving in this range. It suddenly came down here, and it suddenly tried to move up, right? And slowly it went up. That is a different scenario. That just I gave you a logical understanding of how common gaps are filled. Okay, when people short, they keep a stop loss here, right? And if the price is not actually bearish, the movement is actually bullish. This can happen when sometimes there are a bearish news about a particular stock. There is some news, but that news doesn't have quite the amount of matter, okay, not the amount of substance to take a stock down, and that is why in this situation this happens. Okay, and this is the condition. And if you're trading here, if you see a gap down, you short in this position, your money is gone. Okay, because everything will be covered in this case. Okay, we will not wait for such a position to happen, that my price was here, I shorted at this price, I'll wait it for retracing at this moment, at this price level. Okay, people will not wait. Okay, the market will not wait. The market will not, hello, yeah, so the market will not wait for you for this to happen. Okay, the market eventually moves up, and you might be waiting for a retracement, but this will not come. You see here, the low of this candle has not been breached yet, it is still going up. Okay, so this is the scenario of a common gap. It is very important, because most of the gaps formed are common gaps. Okay, most of the gaps, and these are the type of gaps where most of the people get trapped. So this is also a gap trap, which I like to call it. It is not a theoretical thing, but I like to call it a gap trap, because people see a downturn, a gap down opening, people short. Okay, and they get trapped in their own short position. They are waiting for that retracement, which is never going to come. Okay, that retracement is never going to come, although there can be some extraordinary situations in the market, because market is unaccounted for. Market has nobody to answer to, so it might also retrace it, but it will take time. Okay, and that time is of essence in the market, especially if you can work your order within 3 hours. Why would you wait for 3 weeks for that order to get filled? Okay, so if you want to trade within 3 hours and earn some money, why would you wait for 3 weeks for a certain position to make money for you? Okay, so this is just an idea behind intraday trading. Okay, most of the intraday traders and most of the traders whom I have seen might be positional traders, might be having a different opinion. But in my opinion, if you can earn in short time, right, in short term, why not do that? Okay, if I would have seen this gap and I knew that this was a consolidation, this was a I don't know what to say, this is a indecision phase for the market. The market is also deciding on what factors it needs to work on, right? So sometimes this happens when the stock goes ex dividend. Okay, I've already taught you this dividend wala concept. The stock opens up and the company announces that they are going to pay some ex dividend on their own stock, right? So this kind of things happen when the stock goes ex dividend. There might be a gap down opening, and then the position might get filled. The gap might get filled. Okay, that is the position here. So the common gap is one such gap. Let's go and look on to the breakaway gap. A breakaway gap is a bit, I would say, different, and it is very crucial to our understanding of gaps, breakaway gaps, because breakaway gaps provide us the, you know excellent opportunity to work, right? There might be some form of a dilemma in this case, because many people would consider that gaps are not a very good idea or a very good basis to base our trades on, right? This is not a very good theoretical concept to base our trades on. But believe me when I say that there are some gap traders in the market who trade only using gaps. Okay, they don't see anything else, they work on this only. Okay, they work on gaps, and they work on this type of gap theory. Okay, and the theoretical concept is very strong when we are talking about a simple belief that I taught you about, that market abhors gaps. Okay, this is actually very true. When you will see in the market, which is a highly liquid market, you will never see any gap, because there is a very good amount of buyers and seller present there. So they don't like gaps. Now why would they like gaps, right? The sellers won't like gap down openings, and the buyers won't like gap up openings, isn't it? So there is a continuity in the market that must be maintained. Accordingly, the market doesn't like gaps. This is the simple funda that the gap traders work on, and they also understand it by trading in these gaps. Okay, so this is the process of common gap. Let's get down to another type of a gap, which is called a breakaway gap. Okay, now these are the exciting kind of gaps. And why exciting? Because when a gap trader will look at this particular gap, okay, they will wait and they will look for a trading opportunity, isn't it? So exactly this is the live market situation. Okay, this is a live chart in which a breakaway gap has happened. Okay, this is the gap up opening, right? Now previously the market was in sideways ranging movement. Okay, but when it opened gap up, the opening of the gap up didn't close this gap which was formed, even significantly small, but this gap was never filled. Okay, now if you have seen the charts, when somebody posts which stock is this particular uh, chart based on, if anybody knows, they can get back to this on the comment box and let me know which company's trading price action chart is this. Okay, so this one is the breakaway gap. It is very simple to understand breakaway gaps. Okay, when the breakaway happens, okay, when the breakout happens, it is breaking out of a particular range. Okay, and that gap up opening or gap down opening for that matter doesn't mean that the gap is going to get filled immediately. Okay, it will never be filled immediately. Remember that. It will be filled, it might be filled, okay, but it will take time. So what does this mean? So if this, in this case, if I'm considering that this was a trend and the breakout happened in this scenario, a very good green candle was formed, which is very strong candle. Okay, after that there are three red candles, okay, three bearish candles, and the price took off from there. Okay, the price took off and it consolidated somewhere here and again it took off. Okay, so this is the kind of a gap which provides us trading opportunities. Common gaps, avoid to trade or trade to fill the gap. Okay, if there is a gap down, if you see a common gap, you trade to fill the gap. What does this mean? You trade to fill the gap. Understood? So if there is a gap down opening, you buy. Okay, you may buy and the price may fill the gap. But in another scenario, if the price is opening up, gap up, let's say here, okay, in that situation, you trade to fill the gap. What will you do? You will short that particular thing. So if you are shorting, then the whole thing will go down, the price will come down, and you may earn some profits there. So this is the understanding of gaps. Okay, breakaway gaps are very important. I will show it to you on live charts. We are going to have a discussion on breakaway because breakaway is very good type of a gap. If you can analyze it, if you can trade in it, it is a golden opportunity, and this might be one of the uh, you know outstanding method to trading. Okay, and one of the most important thing apart from this is this type of gap is not usually closed within a small time frame. It may be closed in the future, but it is not closed immediately. Right. So if it would have been a common gap, the green candle, the gap up, the red candle here would have completed and completely filled the gap here in this position only. Okay. It would have not waited for so many candles to just fill this small gap. But it was not a common gap. It was a breakaway gap. More appropriately, this was a breakout gap, right? So this is a breakout gap. And alternatively, if the price goes gap down and it opens somewhere here, and if that is a breakaway gap, the price is not immediately filling this particular gap. Okay, so in that scenario, it is called a breakdown gap. Okay, this is simple, clear, I suppose. We will have some discussion on that too, so as to understand it better. Okay, now another type of gap is runaway gap. Now runaway gaps are very important. Just like breakaway gaps, you might be confused in this particular discussion. Now, what are breakaway and what are the runaway? Both are the same, I suppose, but this is not true. In the breakaway gap, there is a consolidation here. Okay, there is a choppy session before a breakaway gap, but in a runaway gap, there is a defined trend. Okay, now look at this. There was a defined uptrend in this position. Okay, defined uptrend, and then there is a gap up. Okay, and then there is a again an uptrend is being maintained in this position. Again there is a gap up, and again the uptrend is being maintained. So this type of gap is called runaway gap. A runaway gap can be confusing because we already know that it is an uptrending market. If you see a gap up, now there are some people called inverse traders. Okay, so they go against the market. If they will see a very good booming market, they will short. Okay, that kind of people are also available for us to see. But what we need to see is you need to see the trend of the market first. So if the market is going up and the trend is going up, remember the trend is your friend, right? So the trend is your friend, don't go against your friend. Okay, I'm also your friend. If I'm telling you that the market is uptrending, if the gaps are formed, if it fills up all the criterias of a runaway gap, then you can completely use this particular thing. Okay, and the price will pump up to this level, and then it might come down or whatever it is, but you will earn your good profits in in this case also, right? Apart from that, runaway gaps, one may confuse this runaway gap with exhaustion and breakaway gaps. Exhaustion we are going to cover next, but you may confuse it because many people confuse it for breakaway gaps or exhaustion gaps. But it is not true when you know all these understanding that I made currently, all the points that I made. Okay, with that understanding, you can be sure if this particular market can work for you or not, right? So runaway gaps are also formed due to a panicked state of buying or selling. What does this mean? Panicked state. Okay. Many people think that the trend is going to reverse after a gap up. Okay. Or the people think that I'm too late to enter this market. The uptrend has already started and I am very, very late to join this party. Okay. This party is going on somewhere in the neighborhood. You don't know where it is going, where it is happening, but you want to join the market, join the party. What you will do? You will pay people extra, isn't it? You will pay a premium price to know the address of the party, where their party is going on. Just let me get into the party and let me enjoy that party as well, right? So that is what is happening in this particular condition. When a runaway gap is formed, the people are afraid that they will miss out on that particular journey upward or a journey downward, right? In this case, the bulls will, the market participants will be, and they might be feeling a bit of a missed out kind of a feeling. We say na FOMO in current situations. FOMO, like FOMO means the fear of missing out. So this is the factor that is working in this case, in the runaway gap case. One might feel that the trend, I'm too late to enter the trend. Okay, so they pay a premium price to enter the trend. They push the stock up, they push the asset up. Okay, and this pushing leads to some gaps, and these are continuation gaps. Okay, you will see here. This panic is usually created by short sellers during an uptrending market and buyers in the downtrending market. Okay, so if there is a buyer in this particular uptrending market, so they will look for they will look for buying opportunities to get on the train, hop on the train, and reap the benefits of this uptrend. But they will feel that they might have to pay extra to enjoy this party. They might have to pay for the stag entry to enjoy this party, right? So that stag entry is these gaps. Okay, the market is making the stock push up, and that is what is called a panic state of buying. Okay, this is a panicked state of buying. People are buying because they are fearing that they will miss out the profits. They will miss out on the profits. Okay, so this is the case of the runaway gap and the breakaway gap. Okay, both of these we have understood. So let's get to the market and let's identify some of the trends which we can see, right? Okay, I hope everyone can see this chart, I suppose. Just put a thumbs up or yes if you can see the chart. I suppose everyone can see the chart. Yeah. So let's begin. This is the condition right now that whatever the stock it is, doesn't matter. It must actually have respectable volumes to work in. Okay, that is the only concern. Which it is. Okay, this is a respectable stock. We can go for the understanding. Okay. Now to spot gaps without any straining your eyes. Okay. Without straining your eyes, there is a very good indicator that's called gaps. Okay. It does the work and it does the work quite beautifully. Okay. Now in this situation, you might see a gap here, which is a continuing gap. Okay. It has not been filled yet. This is the gap which was formed somewhere around 20th of July and 21st of July. Right. So you will see that there is a gap up, but What do you think? What kind of a gap is this? Post on the comment chat box, that I can see your replies as such. What do you think is this particular gap? Let's wait for some of the replies. Until then, just understand what I've taught you. The three types of gaps that I've taught you. It is just to make you, a bit comfortable, because you have got only three options, and one of them is this type of a gap. Let's see if you can post what kind of a gap is this. Okay. Okay. You have got one answer, that is a runaway gap. Okay. Just check once again if it is, kind of fulfilling every criteria of a runaway gap or not. Okay. Or is it some other gap is not fulfilling the criteria of a runaway gap, right? Might be a short uptrend, but it is a very short uptrend. Nah? Before that, what was the trend of the market? Before that, the trend of the market was a consolidation. Better yet, this was a triangle formation. Okay. I've taught you the American chart patterns, right? I will show you why this is a triangle formation. Okay. Let's start here. Put it somewhere here. Okay, this one. Okay. You can see a triangle being formed here, isn't it? Everyone can see this triangle, right? This was the triangle that I'm talking about. This triangle. Okay. Now this is the triangle that is being formed, and this triangle is very very important when we are learning about the gaps, because gaps are nothing but a value addition to our trading tool. Okay, a value addition and understanding addition to our tool, right? To our toolkit, this is one of the value addition. So when you see a triangle formation just like this, you wait for a breakdown or you wait for a break up. Okay, break, not break up. You wait for a break out, right? Or a breakdown. If it goes below, it cracks below the price, it will be a breakdown. And if it pumps out, okay, of this upper trend line, then that is a breakout, isn't it? So everything breakaway is it? Yeah, absolutely. This is breakaway. Now this is breakaway gap, right? Let's just see parity a little bit. Okay, this is the triangle formation, and the price was moving within this triangle perfectly well. Okay, for many days I would say the triangle somewhere started in this position that you gauged that something might be happening. So from 25th 24th May till this point of July, right? So 2 3 months passed within this time triangle. But after this triangle was done forming, there was a small gap up opening, and that gap up opening was just above this trend line. Will you look at this? Will you look at this? How clear it is? Just above the trend line, this opened up, and this was a very good green candle, right? But this green candle doesn't confirm us anything, but when it is mapped up with a American classic chart pattern, such as a triangle, this is called a symmetrical triangle. Okay, which I've already taught you in the previous live streaming sessions. So this is a triangle chart pattern, and over and above that, there is a breakout. There is a good green candle, and there is a position that you can take in this position. Okay, there is a idea which you can take in this position. There is not an uptrend that is going on, in which case I will consider this as a runaway gap. Okay, this is very important. That is why I showed you the chart just after, you know, three types of gaps. This is very important to understand. Breakaway gaps are different. This is a breakout gap, obviously, and the price after retracing a little bit, people might be waiting for that retracement opportunity. They might be feeling that this is a common gap. But those who know, those who can assimilate both American chart patterns and the gap pattern, okay, the gap theory, which I have taught you already, if those people who can assimilate both the concepts within one concept, within one understanding, they will understand that this is not a common gap, this is a proper breakout gap, and this is a breakout. Okay, if you would have, if you had position here or here at the end of the day, or in this candle, or in this candle, or in this candle, this candle is a bit far too fetched. It is a far-fetched idea. You might be looking for an opportunity here only. You might be feeling sad for the next 2 days, 3 days, but then your position will revive. Okay, it will revive itself. And how it has revived itself? The gap has never been filled. Your stop loss has never been hit. Okay, and look at the position yet. As it is yet to fill up. This is the condition of a breakaway gap, right? So let us find out some other gaps. Can you find out some other gaps in here? Let's take up any other stock. Can somebody? Oh, great, needs practice. Yes, absolutely. It takes practice, and it takes you know a very strong dedication towards learning gaps, because learning gaps is in itself a very elaborate learning, right? Gaps provide us a cheat code in the market. Okay, it is almost a cheat code in the market. Like we used to play video games, there were some cheat codes, right? So these these theories are not just theories as such. These are practical aspects of the market. When I say the market abhors gaps, it actually abhors gaps. So it is very good that people are understanding this. Just put a stock name or any other name which might have gaps. So don't go for very liquid stocks. Go for a proper stock that is that has been pulled right away, right now. So give me some ideas of what stock to enter. Whatever market it is, NSE, BSE, or whatever it is, Nasdaq, because it works everywhere. Okay, it works everywhere, and it works especially fine when we are looking for trading opportunities, isn't it? So no comments yet. Let's see. I'm giving you some more time. Just put up a comment of what stock you need to get some ideas on. Because this is one of the gaps that I wanted to introduce to you: breakaway and runaway. These two are the most important as well as the most commons. Okay. So before that, the time is running out. Let's complete the other two type of gaps, and then if we can take up the market hunting for gaps. Gap hunting will be uh, revived after learning these two, isn't it? So yes. So this is the next type of gap, which is called an exhaustion gap. Okay, the exhaustion gap are very important gaps, because for swing traders. Okay, so gap theory has got everything for everyone. Okay, a common gap for intraday traders, breakaway gap for long-term traders, runaway gap for short-term traders, exhaustion gap for reversal traders or swing traders. So gap theory has got everything for everyone, right? Not everything for everyone, but something for everyone. So exhaustion gap can prove, and these are a very important reversal type of a gap. They can tell you that a reversal is about to happen, and these gaps are usually and formed after a steep uptrend. Okay, after a steep uptrend, or in the case of a downward downtrend, it can occur after a steep downtrend. Okay, and when this gap is formed, it is quickly filled up, just like a common gap. What is the difference between a common gap and an exhaustion gap? You guys put it up on the chat. Okay, Okay, Google share gaps. Okay, understood. So one of the things that we have got, we will analyze Google afterwards. So this one is the thing, exhaustion gap. Okay, there is a that. Yeah, this one. So this is a proper example of an exhaustion gap, a steep uptrend, a gap up opening, and the market is fluctuating afterwards. It is in a choppy session. The market cannot decide if we can go further up. Now, one more thing to notice here, every single candle was green until this red candle was formed. Okay, with this red candle was formed, and then there was an slowly lose of momentum. Okay, so the volume during the formation of the exhaustion gap is also very high. Okay, it is abnormally high. If you want to confirm this type of a gap, you may confirm it by looking at the volume. Okay, so the price after a steep uptrend, the buyers are exhausted and the sellers are slowly gaining strength. Okay, how they are gaining strength? How they are gaining strength is by selling, obviously, and short sellers are also entering the market because they have seen an exhaustion gap. Now, why is it termed exhaustion gap instead of just a reversal gap or something like that? There is a very good logic behind exhaustion gap. Okay, if the market is, if you're running, say for example, if you're running at a speed of 20 kilometers per hour, which is very high for a human, 16 kilometers per hour on the treadmill. So if you're running and running and running constantly, right, and you haven't taken a rest, so what your mind will say to you in the gym on the treadmill, your mind will say, let's run one last kilometer at a very high speed and then we can stop. Okay, so this is the kind of a gap which tells you. Also, when you're doing some exercise, let's say you are doing push-ups. Okay, so we have done 10 push-ups, but afterwards what your mind tells us, what your motivated mind tells you, is that let's do 5 more push-ups and then we can exhaust ourselves, then we can stop. So this is the kind of a condition which is, the market is already pumping up the price. Okay, there is a gap up, and now the market tells us, let's just go a little further and we can rest. Understood? You getting my point? This is the position of an exhaustion gap. You are getting exhausted, and that is why you are pumping up a last round, a last 5 reps of your exercise, a last kilometer on the treadmill, a last run with your mate, whatever it is. This is the kind of an exhaustion gap. It is completely fitting into the logical framework that the price movement as such has run so far away that now it is exhausted. Now it is pumping up last time that a gap up is formed, and then this gap is closed. Okay, so you see 1, 2, 3, 4, 5, 6, and 7. After that, on the eighth day, this gap is covered, and not only covered, but there is a completely different trend afterwards. That is why these type of gaps are very crucial in understanding the market and spotting reversals as well. Okay, so this is a reversal gap, very important, very uh, very healthy to trade in such gaps, but you need to identify it properly, because this exhaustion gap, what you're feeling is an exhaustion gap, can turn into a runaway gap. Okay, so there is a disclaimer of caution attached to such gap. Understood? What is your confirmation? I've given you a confirmation that too. Okay, it is here. Last but not the very least is the island cluster gap. Island cluster gaps are very good reversal patterns, just like an exhaustion gap. They are very good reversal pattern, and they are an extended version of the exhaustion gap. Okay, there was a downtrend. This might not be the correct reference to a downtrend, but consider it like this. If there is a downtrend and there is a gap down opening, okay, there are 2 3 candles being formed in this range. Okay, and then there is a gap up like this. There is a gap up. When this gap up is formed, this gap will never be filled. Okay, this gap, this opening up gap, this gap up, not this gap down. Okay, this is a bullish gap here. This gap will never be filled, and the downtrend as such will get reversed and it will convert into a uptrend. And this is the position of a island cluster gap. Just give me a moment. Yes. So island cluster gaps, very very important. Good reversal pattern. And also, I taught you one thing while I was teaching you the Japanese candlestick pattern. Okay, I suppose I didn't teach you that abandoned baby. You might Google it. It is just an abandoned baby here. There are different abandoned babies here. Not babies, but abandoned candles here. So these three or four candles, whatever is being formed, this looks like an island, right? Different island cluster, just like say for example, the Indonesian plate, that particular island cluster is there. Just like that, this particular is islands are there. Okay, this is Philippines, this is somewhere else, right? This is East Timor, this is some other island, Java, Sumatra, Indonesia. These are the different islands and then there is a gap up. Okay, so this is a downtrend getting converted into an uptrend. This gap will never be will not be filled eventually. It will not be filled immediately, but it will be filled eventually. That is the idea behind island cluster. Okay, very very good. It is a reference to a abandoned baby, which is a Japanese candlestick pattern. I didn't teach you, I suppose, abandoned baby. It is just a extension of a doji pattern. Okay, abandoned baby is also formed in this manner only. Okay, gap down, gap up after that, or a gap up and then gap down after that. So this, in this position you can understand island cluster gap. Okay, now we will hunt for some gaps, and until the time permits us, there's a healthy 10 minutes, so we can get to it. Let's go for Google Internet. Alphabet is the parent company of Google, so yeah, this is not exactly correct, I suppose. Nasdaq wala Google is okay. Yeah, this one. So this one is okay. Let's spot some good amount of gaps first. I will just give you guys a very good opportunity to understand such gaps and all. So can somebody tell me what type of gap is this? Let me just highlight it for you. Can somebody post it in the comments? What do you think? Which type of gap is this? Yes, curiosity is always awarded. And this gap is one of the very recent gap that I covered. So I hope one of you might answer this correctly. This is not the ideal condition though. Okay, but we need to adjust itself, adjust our criteria accordingly. Yes, exactly. Right. So this one exactly is an exhaustion gap. Okay, not a very very strong and steep uptrend, but still we can consider it an uptrend. Okay, the prior trend was also downtrend, no worries, but this is particular condition where the market is going to reverse the trend. Okay, although if you are looking for a short term trade, this can be considered an uptrend. And then the price pushed up one last time before encountering a very very strong resistance at this position. Can you see the resistance in the price past? Right, in the history of the price chart, there was a resistance already at this position, right? So when the gap up happened in this case, right, The price exactly on dot, and very clearly it touched this level of 152.05. The high of the candle is 152.10. Okay, that is 5 cents difference in the price. And that is how crucial every, assimilating every other information as well is important for us. This was a very historic resistance. Let's see if the price has ever broken through this resistance or not. Absolutely not. Okay, this resistance was never broken. And this, which was supposed to be a runaway gap, okay, it was supposed to be a runaway gap because the gap was huge. The open was here somewhere, right? The gap was super huge, right? And that could not sustain itself, and the price went down. Reversal happened. So runaway gap, people might think it at first, but you need to wait. Okay, look at the other confirmation that I wanted to tell you. Now, technical analysis is just the way it is, and it is so beautiful that every single moment you analyze something really crucial, na, you will feel as if feel as if you already know what the market is going to do. Okay, you already knew that this condition is going to happen, and you could have predicted it very properly, right? What did I tell you about the exhaustion gap, how to spot an exhaustion gap, how to differentiate between an exhaustion gap and a runaway gap? Yes, quickly put it on the chat box. I know one of the most beautiful viewer, I would say. One of the person is answering very well, and to be very honest, curiosity is awarded at every level, at every place. So let's see. Can you spot something here, which I've just opened up the volume for this stock, and I told you that there is a thumb rule to identify a exhaustion gap. Can you see that here? Can somebody post it? What thing is here that will tell me that this is not a runaway gap? This is an exhaustion gap. Quickly put it up on the chat box because we are running out of time. Okay, sell is okay. But what is helping me identify this is an exhaustion gap? Yes, very good. Yes, that is the thing. Volume. Exactly. Outstanding observation. So this is the volume. Now look at the volume moving average and look at the stock itself. Okay, the volume itself. Look at the moving average where it is, and look at the moving average on this day. The volume on this day. The volume moving average is way below, which is way below this particular moving. It is all abnormally high. It is double the previous or the moving average, right? It is double the amount of uh, stocks that are being traded on this day. And this was a bearish day. Absolutely, the volume is the criteria here. Abnormally high. I already told you. Abnormally high volume. This is an abnormally high volume. That is why this is an exhaustion gap. I don't matter if this particular criteria is being filled or not. There has to be an uptrend. There has to be a steep uptrend. It doesn't matter, right? Because this is more important criteria. This is the thumb rule of differentiating between what do you say? Differentiating between a runaway gap, a breakaway gap, and exhaustion gap. This is an exhaustion gap. Okay. Now let's see some other type of a gap, right? Spot some other gap. Recently, this gap has been formed. Okay. Now, what do you suppose? So, which type of gap is this? Can somebody tell me? Right. So, this I would say is not a breakaway gap because there is no consolidation here. There is a small consolidation here. This can be a breakaway gap. Okay, this can be a breakaway gap, or this can be a common gap as well. But a common gap has to replace it, has to fill the gap eventually, like immediately, right? But this might not fill the gap eventually. So if it is going down and down, people are going to short and sell their positions. this will continue probably. Okay, but this doesn't mean that this has to continue. This might get converted into a common gap as well, because the earnings and revenue is due in the October. Okay, so the market might anticipate that level, and that level of earnings for this particular stock, and then the price may move up and continue and close the gap here. Okay, like this one. This is also a common gap, quickly filled up after 3-4 days. But this already 5 days have happened, so I suppose so. This is a breakaway gap. Okay, this will continue down, or this can again now continue and consolidate and then continue. Okay, that way it can work. Another type of gap. Let's see if we are getting to see any other thing. Yeah. Now look at this particular gap. Okay, this one. Can you spot which type of gap is this one? Let me just zoom into this. Yeah, this one. Can somebody tell me what type of a gap is this? Because this is a very different thing, right? It's a different thing. Post it. Yeah, yes. Okay, breakaway. Okay. But what is happening is the gap getting filled. The gap is not getting filled. I don't suppose so the gap is filled, because there is still a gap between this week and this week. Gap is not filled yet. So this is a runaway gap, because there is an uptrend. Okay. And the uptrend is continuing. After that we see that there is a different type of a position. Let's just test you guys. Can you tell me which is the reversal point that you can identify based on the type of live streams that we had? I hope so a person who has followed us properly will be able to tell me this answer. I'll give you some options and tell me which candle is the reversal point here. Okay, where you can see that there is going to be a reversal soon. Remember the question very well. There is going to be a reversal soon, I'm telling. Okay, yeah. So let's consider this one is A, this one is B, this one is C. Okay, give me the correct option in the answer. This one is A, this one is a B. Tell me the correct reversal point where the reversal happened, or where you thought the reversal might happen. Okay, A, B, C. I got three options. Tell me, based on our live streaming sessions till date, one who has followed it properly will be able to guess it correctly, right? This is the correct option here, which tells us that yes, reversal is around the corner. Okay, just this one, and then we will wrap our session up. Just you have to post A and B and C quickly. You voting for Dr. Reddy's. Okay, we have got one answer, that is B. Okay, B. Okay, right, B. Now understand the question very well. Okay, that tells me not the reversal is happening. Okay, it might happen in the future. It is just signaling me that a reversal is down the corner. Okay, so yes, B can be a very strong point where people will short, obviously, but A, doesn't it look like something? A option, doesn't A option look like something? Okay, what does it look like? Can you guess it? I have taught you the Japanese candlestick patterns. Which type of a gap, which type of a pattern is this? I've already taught you this one, right? This is not a very strong pattern, because there was no clear option here, cut to cut option of a reversal. But it is telling me that something is round the corner. that is a reversal is around the corner, right? Because there is a very strong resistance at this point, and the price never touched this point again. Okay, afterward it was broken up at this position, but there was a very strong resistance at this point. The price went back down. This is the position where I will get interested into the stock. This is obviously everyone is excited at this candle. At this candle, everyone is shorting. But when will I get excited? I will get excited looking at this candle, and I will be following this particular stock continuously. I'll be monitoring this stock. I'll keep it on my watch list, isn't it? So comment down which type of a candlestick pattern is this one. I'm not going to tell you. Right? So just post it down and let's see. The C is nothing but a normal candle, and then price move down. Okay. So that's all for today. Thank you very much for joining in. I suppose everyone might have learned something today of value to make their trading quality better. So thank you very much for joining, guys. Take care, and until that time, happy trading.